Okay, welcome everybody to this evening's AUDJPY Securities webinar. My name is Duncan Cooper. So tonight's webinar is Forex Trading Live Market Analysis, which we'll get into in a moment. Just to give you a heads up, tomorrow evening I will be doing another webinar at 8 p.m. Sydney time on the topics of average true range and session opening times. And also how to use the today's projected high and low indicator. So we'll be getting into all that. If you want to join me, just register your interest at our webinar page and I look forward to seeing you then. Right, so into this evening, if everybody can read through the disclaimer. For those on our YouTube live stream, I can't see the chat there, but I'll give you a link to join us in the webinar if you want to talk to me. For those in the webinar, you can use the chat box or the Q&A box to talk to me. So I'll just take a moment or two to read through the disclaimer before we get into the webinar. All right, just for those that don't know me, my name is Duncan Cooper. I'm a Senior Market Strategist and Trading Mentor here at AUDJPY Securities, and I'm a full-time Forex trader. Almost been trading now 20 years in the Forex market. Started in 2005. I've been mentoring for more than 10 years now. If you want to contact me about the webinars, then my email is there, duncan.cooper@acy.com. And through the week, you can connect with me at our website, which is acy.com. Go to the Market News tab. At AUDJPY Securities Australia on YouTube. And if you want to connect with me on Linktree, then my handle's there. You can just grab it and grab my links there. And if you want to use the chart layouts and templates that I'm using in MT4 tonight, then just contact Nathan.bray. His email's on screen. For those in the webinars, put his details in the chat. He'll only be too happy to set you up and have a conversation with you. There we go. All right, so let's get into the news items for the week. We'll look at the red items. I'm at forexfactory.com looking at the red items. Time shown in my time, Queensland time. So coming up this evening, 8 p.m. for the UK, we have the monetary policy report hearings coming out. CPI figures for Canada at 11:30. CPI month on month, median CPI year on year, trimmed CPI year on year, common CPI year on year. And maybe they're expecting an ever so slight uptick. So it's going to be volatile for Canadian crosses, so it's going to be difficult jumping in a pair headed in, but it's worthwhile noting where the levels are after that if you like to trade the Canadian crosses. Getting into tomorrow, we have 5 p.m. in the afternoon for the pound, CPI year on year. Thursday, we have a tentative JPY, Bodge Governor UADA speaks. So I'm not sure what he's going to be talking about, but definitely the potential there for the market to get driven. We have been seeing a little bit of yen strength coming back into the market. So that may be further fuel things. 6 p.m. for the Aussie, we've got the RBA Governor Bullock speaking. 11:30 in the evening for the US unemployment claims figures. That can always drive the market. Into Friday morning, into Friday, then in the evening, 5 p.m. for the pound, retail sales. Then we got the flash manufacturing, flash service data for Euro, pound, and the US through the evening. So at 6:15 we have the French flash manufacturing and services PMI data. German at 6:30. Then we have the UK version at 7:30 p.m. For the Swiss at 10:40, we have the S&P chairman Schlegel speaks. 11:30 p.m. for Canada, we've got core retail sales and retail sales. US at 12:45 in the morning, we have flash manufacturing and flash service PMI data. Now that the clocks have changed, life becomes a little bit more difficult as a Forex trader in Australia with these early morning times. So 12:45 into Saturday morning, the US flash manufacturing and service PMI data, and that's it for the week. So be aware of the red items. These flash services and manufacturing data releases can definitely drive the market for each of those countries, especially if they don't come anywhere near print. All right. And of course, Wednesday, we have the CPI data coming out for the pound. That's expecting to uptick as well. So if that does uptick considerably, that would potentially be pound strength. And we may have put a short-term bottom in on the pound, depending on how the next few days tick. So I'll be interested to see what happens with that tomorrow. All right, let's get to the charts. So first up, the US dollar. Now it's obviously still in an uptrend here, but we are having a pause right at the top of the range. So if you go to the monthly chart, you can see the range. You can see that we haven't been all the way up to that top, but we've just tickled this top. And there is the question, are we going to stop at the top of the range to move back down? We've, of course, been rushing up the last 2 weeks after the US election. And how long, so it's been about 2 weeks now, how long can the Trump trade continue? You would think we will get at least, even if it's going to continue, you would think we would get some kind of pullback, profit taking on the move at the moment. So we're at a very logical level where the US dollar index could pause. Here's a weekly view. Could pause at the top of the range here. So don't be surprised to see a short-term reversal, at least a short-term reversal. All right, so watching 106.36 here at the moment, which we've kind of false broke. We may come back up to trade at 106.36 on the index, but then if we can't move above there, if we retest to fail, then we may well see, at least in the short term, some movement back down. It's well worth understanding that position and what is it doing from day to day, because that should then lead to your decision making on pairs to the US dollar. If this is starting to look weak at the top, pairs to the US dollar should be moving up. All right, so let's have a look at S&P 500, which had a big rush up. It's pulled back and it's just holding above this top, which was a weekly top and which was the all-time top until we moved higher. So that's the key level if you're a trader on the S&P 500. Support is at that top 5881.34. So trying to trade as close to that level to be a buyer for support is, I think, the key at the moment. All right. We've already had just, I think, an update. So it's starting to confirm this higher bottom here. So, and it has already today retested that level. So it may retest that level once more today. That will be the level to watch intraday for support to get in on a tight entry to continue the move. And, we only had a 50% pullback. So if that's all we're doing, then I would be anticipating, if you want to trade up, looking then to target to a fresh high up towards the 127 extension, which is at 61.15. All right. Against the euro dollar, which has been selling off in the London session at the moment after a nice move up yesterday. So to the daily, but we might go to the monthly to start with. We have traded below the last higher bottom low, and we have come back up to retest that intraday at the moment. So the question is, are we going to be able to move back above 106 in the short term, or does 106 hold as resistance through the week to keep us to the short side? All right, we've probably already done the range for the month. Potentially, if we match it to last month's candle, let's just go to, we'll go to the 4-hour chart in a moment, but we'll just go through the time frames. The weekly trend's down here. It's getting very close towards testing 104.48. So at the moment, we're actually getting support at 105. Come back up to test 106, and the big question will be, does the market have enough buyers to move it back above 106? All right, here's the daily look. So we're having had 2 positive days. Today, that's the monthly low I've just been discussing, 106. We're just being held there at the moment. So if you think we can't move any higher and we're still very much short, that is your level at or close to 106 to go short. And if you're wanting to trade back up, and I'm inclined to think that this big move down from that high, I'm inclined to think that the odds are more favoring maybe a move back up towards this area, 107.61, 62% retracement. And more even, there's actually an imbalance in here, which may need to be filled over the coming weeks. So if we do start to see some strong price action, if we can move above 106, I'd be inclined to get long to target this area up here, up to, it's kind of 108, 80-ish area here, up to the 109 level, looking to see if price will actually come up to fill that imbalance there. And logically it overlaps with the 79% area roughly. So it is overextended. Doesn't mean to say we have to doesn't mean to say we have to rally. We could just be now tagging 106 to now move back down to 105 and try to move down to 104. What did I say the number was? 104.48. I think I said the number was. So let's just move down the timeframes. I just wanted to have a look at what the range was for last month. So last month's range was approximately that. And we've already done that range. So theoretically, we may have already put in the low of the month. So then we will retrace back up within the range that we've created for the month. So it is very logical to think that maybe we'll get a retracement. Of course, price could still be very weak and want to go even lower this month. Now on the 4-hour chart, we are putting in an uptrend. Started putting a higher top, higher bottom, higher top. Question will be today, how much do we pull back from 106? That's what I would be monitoring. I'm more bullish. Not to shout my own story, but I actually got long last week here, down here. I just decided that this was way overextended, and I got long at 105.01 with a 100 pip stop. Didn't trade too much below that. So I'm a kind of risk-free at the moment. I'm just hoping it's going to come up for a retracement back up into this zone. In fact, on the 4-hour chart, this imbalance that I put in there from the day chart is actually all the way up to there. So it gets us up to slightly above 109. So on the 4-hour chart, the imbalance remaining is there. All right. And if you understand imbalances and you've noted them on your charts, you'll see more times than not, price will come back to these areas. So, getting short down here when potentially price can move back into this imbalance doesn't make any sense to me personally, but we could still be moving down. So intraday today, I would be looking for the opportunity maybe to see price pull back 50% of yesterday's range. So that 4-hour range is yesterday's low to high. And logically for me, the 62% level to the 79% level area would be where I would look for a long if I wanted to get long. However, we were quite strong up here yesterday, so price may not want to move down that much, but it's just a question of looking for your intraday setup to move back up, I think, if it offers. I mean, this is intraday at the moment, it is in a trend to the downside, so you could be looking to get short. Personally, if I was looking to get short, I would have already done it up here on that failure, if that was my frame of mind. Now it's already moved down from the prime selling area of 106. Then it, where we are right now doesn't make any sense for me to get short because it's not in my optimum area to get short. Of course, as I'm talking, price is still trying to move down. But if we are going to be moving up, then the logical area to watch today would be between 105.50 to 105.35. All right. As I'm talking, it's still shifting down. Of course, by the end of the day, we could just trade all the way down for the day, and we could be coming down to test 105. So we'll have to wait and see. I just think if you haven't already got short today, you've kind of missed the boat. Euro yen. So what we're seeing on the euro yen, the weekly trend at the moment is still up. There's a very minor area of support here, just here. If we break this area, whilst the most significant bottom is down here, which is higher to the last one, and this area up here is higher to this area here. There's a little minor area here that if that breaks, we're probably going to go down to support at 155.15. So today, or this week, I should say, we've come up to retest this weekly area here to the daily, which is down. So that's the weekly area I've just been discussing. We break that area there. So I'm going to put a line in. That's going to really shift the weekly perspective, I think, to the downside. 61.841. All right. Now that level is actually a buyer's level at the moment. And that was a weekly high there. You can see today and yesterday we held at that level. 163.9. And we could get support today at 161.84. We're just at last week's low at the moment. So we may not get down to there because at the moment we're starting to maybe hold at last week's low and all this consolidation to the left. So down in this area at the moment is the buyer's level. So from a buyer's perspective, you know, watch 162. So last week's low, and where's that level of support? So last week's low, you haven't got my charts, last week's low is at 162.31, down to 162.100, then down to the weekly support level at 161.84. Watch that zone for support today. That's not where you want to get selling because we're heavily into support. And this imbalance candle here hasn't been fully filled. So we may start to see price hold here to move back up. So can you see it's set up to be a buyer down here in this zone? Trade back up in the range. So again, this week, if we trade back up to 163.89, the weekly high to the left, that's been proved to be resistance this week. So we could be trapped between those two price points, or we're going to maybe see a break out to the downside. But in any event, if you wanted to get short today, you really needed to look at maybe this trend line break, past tense. But we can't go past tense, obviously. All right, that's really selling down at the moment. So I'm guessing the euro is still moving down. All right, it's moving into that zone. Is that zone going to hold? We had a lot of consolidation here yesterday on that euro dollar, where we came up, pulled back, and of course then had a very strong move up through New York. So it's well worth watching. Just so I'm back on the euro dollar. These intraday lows yesterday, these get swept. We may see a false break of stops going off here to collect orders to then move back up. So I'll wait and see. You can watch to see if you can see a sweep of these levels, orders get swept, and then do we see a reversal back up? We're just hitting the 79% level right now. Euro yen's coming down to weekly support level. Euro pound. So on my daily chart here, we're starting to move back below 83.40. 83.40 is a higher time frame level. 83.40 is a monthly level over here. So on the weekly perspective, we are lower bottom coming up to put in a lower top. It looks like at the 62 level. All right. Just move down to 4 hour. Be nice to sell a rally if the market could offer it. So if the market could break this 4 hour low, so we come down, Then can we rally back up? Form a head and shoulder pattern here. We've actually false broke last week's high here. So does last week's high get retested up here? It's about 83.58. Do we see that kind of formation over the next 24 hours? Do we come down, rally? That would probably be a 79% retracement of this range for then an opportunity to trade down. That's not where you want to sell straight into 4-hour support at the moment. So you want to ideally see that break, rally, and then look for the opportunity to trade down at the top of the rally. Okay, pound, which I'm guessing maybe following the lines of the euro dollar at the moment. Here we go. Pound's just going back to where this consolidation area yesterday on the 15-minute chart before we broke higher. And let's just go through the time frames. Now the monthly trend is up on the pound. It's a little bit different on the euro dollar. High bottom to top, so let's draw in the range. Weekly, so we're into the 62.79% area. This is a June low here, which we've just traded slightly underneath, and then we came back above. So there's two weekly lows here. 26.12, 26.65, and the market's going to be asking itself this week, are we able to reclaim some of the weekly losses? Are we maybe putting in a low here, which could be a higher bottom on the monthly chart? All right, whilst the trend on the euro dollar is down on the monthly because we broke 106, well, it's not the same on the pound. We would need to break 22.99 here to change the monthly trend. So this at the moment is just a retracement on the monthly. Yes, it's down on the weekly. Yes, it's down on the daily. We had a very positive day yesterday. Coming back up from this area. Personally, I will be watching 126.12 here to 126.100 for the buyers. 2 days, it's proved to be support. We have had a further day up today. We traded above yesterday. And while we are pulling back, there's a little minor area of support just in here. You could draw your fib from two areas. If we're thinking this is just a pullback and we are getting support at 126.12, that's what I'm thinking, then that's how I draw my fib from that low to high. You could use actually this little area there if you really wanted to. But you can see yesterday we were holding at 126.12 on these 4-hour candles. And whilst I'm a little bit bullish down here, you could still be bearish, even though we're quite oversold. And if you are, then you could have got short today on that retracement, but we can't go back in time. Up at that 79% level. So there is a possibility if you got short up there that we're moving down to the 127 extension, which is at 125.69. If that's your bias, then hopefully you got short higher up. Because you've kind of missed the boat now. If we're actually bottoming out to maybe reclaim some of the last 2 weeks' losses, then, just looking at this 4-hour chart, there's an imbalance in here. All right. That may need to be filled. We may, a very logical area is, go back to the daily. If we are coming back up from that high to low, 50% level overlaps with these lows in here. 128.34. And even, if we're going to be short long term, it would just be nice not to be selling so low. Is you don't have to go long, but waiting for some form of rally be great if we came back up to like 29.50, 79% fib to get short for the next push, if that's what the market wants to do. But selling so low at the moment. I don't know if we're getting very close to the short-term bottom, but you need to make your own decision. So at the moment, I would be monitoring to see if we're actually going to change this 4-hour trend to up. Well, we're going to put in a higher bottom here. So let's move to the 15. You're going to see we're at the 62 level at the moment. I just want to see what that euro is doing. All right, it's doing what I just said. It's ripped through those lows and it's withdrawing back up. So it's just cleared out a whole bunch of stops under there. And I'm guessing that euro yen's just is trying to move through 61.84 there. But I'm sure the dollar yen is moving down with it. Yes, it is. 15-minute chart. Dollar yen's moving down with it. So dollar euro yen is moving, dollar yen, euro yen's moving down that way. And selling pressure on the euro dollar as well is exacerbating the euro yen move down here. Okay, looks like we're maybe breaking underneath there for the euro yen. All right, so back to pound dollar. So good area on the pound dollar here, that's 79% level, 126.16 down to 126.12. What is going to happen there if we can get down there? Watch it in line with the euro dollar. If the euro dollar starts to really move back up now, it's already putting a wick on here, but that's a big 15-minute candle. If we start to aggressively reject back up, you're probably going to find that this pound dollar closes back above the 62% level here. And then you want to decide, do you want to get maybe looking for a buy position? I don't know, close to the 62% level. But keep monitoring, we may come into this 79% zone. And like I was just saying on the euro dollar, we might want to just run the stops underneath here. First of all, and then reject at 126.12, weekly support, and then do we hold here to move back up the range? But this isn't where you want to. If you wanted to sell, you should have sold up here somewhere. Because now on big long candles like this, often we get overstretched on one candle and we come straight back up. All right, pound yen, I'm sure that's moving down. So today and yesterday, this high over here, this is the day chart to the weekly chart. This weekly high here has become resistance for the pound yen. And if you had your lines drawn in correctly, you should have hopefully started to see that intraday, much like the euro yen, holding at a similar level. All right, we're just trading down now to a level of support. So it's not where you want to sell, 193.69.9. All right. All these yen pairs are starting to look the same, except for the dollar yen, which hasn't quite manifested exactly the same. Yen pairs are starting to show daily chart downtrends. So the most immediate trend now is to the downside. And like we've had this rally here, these yen pairs are all moving down. You've kind of missed the boat. If you didn't get in some form of shorts in this area, then you've missed the best opportunity. You're going to have to wait now for the next rally phase and then try and get short. All right. So I would be on this pound yen at the moment, dragging my fib down and looking for the next rally. Now, if you want to go counter this daily area of support here, you could be watching that level on the 15 for a reversal back up, but you are kind of definitely going against the flow of the market at the moment. So it'd be a lot nicer to wait for a rally and sell the rally as and when that comes. I know, if I'm not short pound yen, so I can't sell at the bottom of a move. At the bottom of the day, I have to allow myself for the market to rally back up. So I do nothing till I have a rally that comes back up that starts to turn over that I like the look of. All right, I'm not going to sell at the bottom. Have the fear of missing out. So we'll have another look at that euro dollar. All right, it's starting to maybe hold at 79. Pound dollar just coming down into 79. All right, Aussie yen, which has been awfully range bound, but it is trying to break down to the downside. It's broken the last high bottom. In fact, broken the last two bottoms. It is on support here. So with this being so range bound, whilst it is kind of downtrending, it is still holding to some form of range. All right, so it isn't where you want to sell right now. If you want to sell, if we are moving down long term now from this false breakup here, you want to sell a rally when a rally comes, not at the bottom of the move into the bottom of a potential range here. Now, if this is going to hold as the bottom of a range, it could, to move back up once more, then you just want to monitor, you want to monitor the bottom of the range for an opportunity to reverse. You could just be buying at the bottom. I did that yesterday on the New Zealand dollar. Could be buying down here to trade back up to the top of the range. You could be buying down here with a 100 pip stop or a 50 pip stop below, whatever amount of pips you want to put underneath, be buying right at support, or moving to a 50-minute chart and looking for your setup to trade back up, like a tight trend line break to the upside. So it's a bit early in the piece at the moment. We've just obviously had some very sharp drops on the 50-minute candle, and there is no trend line break set up here. You either have to decide to click in, stop below the area of support, or do nothing. All right, to the Aussie. Okay, now the Aussie, if we go to the monthly charts, we are actually in a range, but potentially as well in an uptrend of, now I can determine an uptrend here that is a higher top to that last top there. We could be putting it, until we break below here, we potentially could form a higher bottom here. And, we could be in the higher bottom formation area here to move up. That's what I'm looking at. I actually got long yesterday. I got long Aussie dollar yesterday and New Zealand dollar. So the weekly, while it's down, as I say, the monthly is up. So I'm thinking maybe a higher bottom is going to come in here, maybe in this area on the month of this range. So that's the monthly range with the fib. There's a 79% level at 64.75, I think it is. And I was watching the daily chart, this level here, 64.79. I could see that we were underneath there yesterday. And I was watching price action intraday kind of sideways. And I was thinking maybe price can't get to the bottom of this big rejection candle. Maybe it's going to false break this area here. So and maybe we're going to move above the 79% level yesterday. So I decided I got long about 64.55, about where my mouse is. So I know it's counter trends, but I'm thinking maybe we're bottoming out down here for a higher bottom on the monthly chart. I'm already risk free, so I can at least watch to see if it's going to move up. Now, intraday today, price may come back down to retest this area at 64.79 before moving higher. Of course, we've held at 65.12 today. For the sellers, that was the level to watch today to continue trading down in line with the trend. But I've told you my reasons why I think we could bottom down here based on the monthly chart. But I could be wrong, and the sellers could be in control from 65.12, and we could just go down to the bottom of the range if price wants to do that. Now the 4-hour chart is in an uptrend. You can see it's been basing, then broken out yesterday. So there's the current 4-hour range. Drop to 15. 62 level overlaps with the 79% level at 64.75, 64.76, and you've got that level of day support here. Might not get down there. This current 15-minute candles false breaking the central pivot point, but that would be the best area for the buyers because you can see this consolidation on the 15. All right, I got long round here. I actually got long, I think, that candle there. Okay, it went just a little bit against me for an hour or two, but it did, because I saw that spike down there into this area of support. And I was expecting this to come up, pull back, and then go up, but it decided to come down and retest the area once more before moving up. But I had my stop further down, so it didn't worry me. And I'm at break even, so if it moves down, it's all good. But that would be the most prominent buy area today if we can get down there. If you start to see this pair starting to, if it comes up and then once more retest the central pivot point and holds, then maybe you want to look at this area to try and trade up from or close to. But what we might see over the next 24 hours, we've obviously traded above 65. We're not quite getting full support above 65 at the moment. Is if we start to see that 65 is becoming support intraday. So if we move back above and then come back down, if we come up and then pull back to 65, that could be a good area for the buyers this week as price unfolds through the week. So watch that area maybe to solidly flip to being support. And might be back above 65 in the next 15 minutes. So you may need to make a decision if you want to get long. May not get down to the most prime level of support today. All right. Just go back to the euro, see what it is. So it is picking back up from, it's probably going to come up and feel the imbalance it's formed on that 15-minute candle. What's the pound doing? All right, it's getting support where we got support yesterday at 126.12. There's a definite possibility. Let me just revisit that pound, as I was saying on the monthly chart. Like I've just been saying on the Aussie, the monthly chart on the pound. Let's just get rid of that fib. This at 126 area. Now we're in between the 62 to 79% area, and at the June low, weekly support would not be a stretch of my imagination to anticipate that that is the monthly range. Even though this is the weekly chart, that's the monthly range up. This is corrective on the monthly to the 62-79% zone. We could get support here for long-term movement up. So being prepared to risk something, I actually did get long at 126.02. Very late trading Saturday morning when we were down there, because I knew weekly support was down there, and I knew the weekly support was a June low. So I traded down there. So I traded very close to the low on the euro dollar and the pound dollar at support. And I put 100 pip stop below. And I mostly got the risk out on my euro dollar. I'm not risk free yet on the pound dollar because it hasn't quite gone up enough. I didn't feel to get the risk out. So we may retest this 126.12 level. We may retest 126.02, but there is the potential for that pattern to unfold. So this is a very good area if you're more bullish to maybe start to position yourself to the long side for a good long move back up. if that is going to come. So I'm a little, at the moment, very aware that the the dollar index is at the top of its range, and we could just stay range bound. We could move all the way back down the range. If we do, these pairs to the US dollar are going to move back up. And this pound then would move all the way back up. All right, so at times I am contrarian to the trend that's been unfolding. Spiking down here. All right, let's get into New Zealand yen, which remains range bound. It's just hit the bottom of my range. I'd be surprised if this isn't coming all the way back up to the top of the range. So the bottom of the range there is at 90.09 for our chart. You could just be waiting for a 4-hour rejection over the next couple of 4-hour candles, see what happens down here. But I suspect we've hit support and we're moving back up towards 91.95 and 92.19. So what is your setup down here to get long? Okay. Last week's low, 90.23 down to 90.09. Day support is support. So any further retest and hold there, should be looking to that area to get long if you want to trade New Zealand yen back up the range. All right, New Zealand dollar. I've been saying we're in this range. I got long down here at 58.49. I would have, in a perfect world, would have loved to have said I shorted up here and I was trying to target down here. But because of the election, I ended up getting out around about here. And it would have been great to have sold up here, gotten out down here, and then bought back at the bottom. But I didn't quite do that. But I have bought yesterday down here at 58.49. What I'm looking to do from this weekly range perspective is trade it all the way back up. Now, if the dollar index remains in its range and goes down, this is the inverse flip. It will go back up. Now, if we get the sustained Trump trade continuing, of course, support's going to break. Daily. All right, so I actually got long yesterday. I could have got long 2 days prior, but I just wanted to make sure that the thing was looking like it wanted to hold, because the US dollar has been very strong. So I thought, well, okay, I'm not going to get too excited too soon. I did give it some breathing space. Now, of course, if you give it breathing space, sometimes it just hits like this candle here. It hits support and then rejects straight back up and you miss. And that's fine because, sometimes you want to make sure that the dominant trend that you're seeing is going to put the brakes on. So I am risk-free now. I may come back down and retest, stop me out. I may have to think about, do I want to get back in? Or it may not retest. So, but if you want to get long, you could be looking to the 4-hour uptrend now. Look for a dip within the 4-hour uptrend. And look, like the Aussie dollar, we're not really trading much below the central pivot point today. We're already starting to maybe reject here. It's just taking out some stops underneath here. Under that intra low there. So the Asia low has just been tripped down to the central pivot point. Central pivot point is at 58.74. So that could be the area of support today. In a perfect world, coming back down to the 79% level, which overlaps with the bottom of the range support, would be the perfect level. But for me, I don't want it to get down there because that's where I'll break even. All right, so I don't want it to get down there, but if you're not in, that would be a perfect level to watch for the buy side. Although you may need to watch this central pivot point because that could be holding today. You can see look left, the intraday price action that has been forming through Friday, Monday. So Friday's high here. There's some areas here. Let me get my other drawing tool. Then we had this high before we took it out yesterday. That is why price is stopping where it's stopping. All right, so that is prime support intraday at the moment, where the market could quite clearly hold. It may not want to retrace all the way down to the 62.79% zone today. It may want to deal off those tops to the left. You can see here yesterday that as it moved above, see the pullback? Didn't quite come down. Asia low got support slightly above that area. And just the London volatility at the moment with the pound and the euro dollar going down is dragging this into that zone. All right, so if we keep holding down the 50-minute chart, then you have to make a decision. Do you want to get long? If we were to move back up to 159 and fell once more, there is the question that, okay, are we topping out at 159? So from a buyer's perspective, you want to see the area I'm discussing right now, around about 58.76 to hold, and you want to see 59 taken out today. If we take 59 out today, then over the next couple of trading days, any pullbacks, you may well see 5,900 to be support to continue to move up the range, all right? So I don't know if anybody has gone long down there, but it should have been an obvious level. All right. Canadian dollar, I'm just going to keep my eye on the euro dollar. What's it doing? And pound. All right. Canadian dollar. So of course we have the CPI data coming out this evening, so be aware of that. We have gotten very strong on the Canadian dollar. We've moved to a higher top on the monthly chart, taking out some highs. And if you're for the bulls, buyers, we now need to see the market hold above the highs. Because if we don't, we may see a pullback. Monthly trends up, the weekly trends up. And I mean, whilst we've got this significant monthly high over here, the more recent high formed is that high and this high. So the market may be looking at the more recent highs for support on a pullback to hold to the daily. So that's this high here, 139.46, and to that top there, 139.58. That monthly one all the way over here is at 139.77. So that whole area there price could at least trade into this area. And if you're a buyer, you want to see the area get tested and hold and price close back above. Right. Moving back below this area is not good for the buyers. If we can't hold that high this week, then we could be moving all the way back down the range. All right, so just for me at the moment, this dollar Canadian, trying to get long it now, it's way overextended. It's fine if you're long and you're waiting to see if this thing can just keep moving. Other than that, you probably, I just feel like it's just so high up now that it's beyond the optimum time to be a buyer. If I started to see a lower top form on the day chart, first of all, I could maybe get drawn into the idea of wanting to short it to trade it back down the range at the moment. But I wouldn't be trading this till post CPI. I want to know what CPI does and how the market reacts from the Canadian data. All right. But I mean, structure in the day chart here, we're still in an uptrend. We haven't even pulled back to the support zone I'm discussing. Probably on the 4-hour chart showing a downtrend here. We do have a lower top, lower bottom. So if I wanted to get long, I would need to see the 4-hour structure back to an uptrend, which it's not. And if I want to get short, I would need to see the day chart starting to at least put in a lower top, which we don't have yet. So for me, that Canadian dollar at the moment is just on the sidelines. Dollar franc, which has been moving up, still in an uptrend. Quite clearly, it's just pulling back. Just want to go top down. Monthly is lower top, higher bottom. So it's kind of, and we're kind of in the middle of those 2 points. So it's a bit tricky to tell you which way the monthly is going to go. The weekly is in an uptrend and there's a bottom here. I'm inclined to think that I would want to see at the moment a pullback within that range to the daily, and 62 level, and that area there jumps out at me for support. 87.30 down to 87.11. I know we're a long way from there, but that would be what I would look for to the buy side. And if that was to do that, that would of course reiterate what I've been saying on the euro dollar and the pound dollar, that maybe they're due a healthy retracement back up. And this is a weekly low over here. To the short side for the dollar franc, if we were to clearly break below 88.26, you could watch then intra-week for 88.26 to be resistance on a lower time frame, trade down into this zone. All right, big question now for the market is how much of a pullback are we going to have? How much is the the dollar itself going to retrace? Are we going to, back to that dollar index at the moment, are we going to retrace significantly back to the weekly from this area? Stay range bound, or is it going to be short term before blowing above? Nobody knows. So we'll just have to watch price action. All right, dollar yen. Just to the monthly chart, that is the lower bottom, and we've had a 79% rally, just short. So it does beg the question, is the dollar yen going to put in a lower top there? Which is US dollar weakness. Does that then create strength on the euro dollar and the pound dollar, the Aussie dollar? All right. So we're just holding at this old weekly low here, 154.54 to the daily, and just struggling to hold at that weekly area. But the day trend remaining up, there is actually a bottom here. That's last week's low to high. We had a very nasty candle Friday, which outside reversed Thursday and Wednesday's trading. But all we've done is pull back to very close to the 79% level of that range. So whilst we're seeing some very negative price action from Friday into Monday, Tuesday, we could just be retracing back inside the range of last week. So I would watch the 79% level here at 153.12 over the next day. If that level holds on a further test, then logically, I would have to say that all we've done is retrace back inside last week's range. So that's last week's candle. All right. And then are we going to put in the low of the week within the week of last week to come back up? So now, the US dollar sellers at the moment really have to make a decision how much of a correction we're going to get from the move that we've been seeing following the election. Because if that 79% level at 153.12 holds on any further test, then you'd have to maybe think, okay, we're maybe putting the low of the week there to move back up. All right, I'll leave you that thought on the dollar yen. Finally, gold, which has been having a heavy sell-off. But we have to realize that the monthly trend is quite clearly up. We're having 1 month down after about, 9 months up. And the weekly trend has turned down. because we're having a month down. But there may just be a false break of that weekly area of support at 2602. And I think that level on a retest should be looked as support. That is coming back above that level, 2 strong days coming back above. So yeah, I will just be monitoring at the moment to the 4-hour chart. You know, get my fib. Keep dragging that up from the higher bottom. You know, if we got a nice overlap of a 62 level to that level of support, which is last month's low, that weekly area of support, this is definitely an area to look to see if it's now going to switch back to support once more to move back up. This looks like it's coming up to fill this imbalance here. So if that was to come up to fill the imbalance here, keep dragging the fib up. And, you know, if it did come up to there, you know, it would be great if it went up, pull back, 2602 remains a support to further the bull market. Okay, so I don't know if that kind of price action is going to transpire, but at the moment, if you're not already long with that 4-hour uptrend that's starting to unfold, you're getting in at the top of the move or close to. So you need to be looking for a retracement. So monitor for retracement, and can we hold at or above now 2602? All right, that's my view on the market at the moment. I guess the big question is, you know, monthly chart is telling you everything. Is that range that is really now lasting? It's been in this range for nearly 2 years. This low here was, well, that's July 23. That low there is April 23. So not quite 2 years, April 23. So what are we? Year and a half? You know, how long are we going to stay in the range? We could stay in the range for quite a while. Would not be surprised to see that that could go up, false break, or maybe it's already failed, come back down. That's the most logical. That's the information that I've got. The market on, you know, the monthly chart is in consolidation. So until it's not, I would have to trade it from that perspective. So if that consolidation holds, that dollar will move back down. Unless we're going to see a massive breakout, which, you know, could happen. We'll just have to monitor. At the moment, we're not seeing a breakout. So we have to start to ask ourselves the question, are we seeing an interim bottom on the pairs to the US dollar? All right, just to finish off, I just want to see what the euro dollar is doing. All right, so this may be putting the low of the day down here. Hopefully, maybe somebody took the advantage on the euro dollar, the pound dollar to maybe get in, or maybe now I move back up for the rest of the day. New Zealand dollar getting support at the central pivot point. I'm guessing the Aussie dollar is getting support that this is holding there, the central pivot. We're moving up. So as those intraday moves that we've been seeing in London at the moment, putting now the lows of the days. That's the big question if you're a trader. Do you want to start to look for a trade to the upside there? All right, I'm going to leave you at that for today. If you want to join me tomorrow, there's the webinar link page at the top. Tomorrow I'm going to be going through the average true range and session opening times. I've got some tools on my charts that show all those things, and how you can use the today's projected high or low indicator to come up with where the high or low could be coming in for the day. I can use that. So if you want to join me for that, just register your interest using the link at the top, and I look forward to seeing you then. Other than that, have a great trading day and a great trading week. Thanks, everybody. Harash, you're asking me, can sudden movement be due to Bloomberg input Ukraine-Russia missile issue? Well, I haven't seen the Bloomberg news. I've just been doing the webinar. So that sudden news, if that's what's happened, then for sure, then that could be why we traded down. You're saying Ukraine-Russia missile issue, nuclear threat, how will it affect US pairs? Well, who knows? I've never been in a position where we've had a nuclear threat or a missile get launched. So I would say I would tend to think it would be US dollar positive, but I would guess it would depend on where the nuclear missile gets launched to. Would be the key. Let's hope that. Let me just have a look at Bloomberg. Let's hope that nothing like that is really happening. I'm going to go to CNBC. Don't see any headlines on CNBC. But of course, we could get some geopolitical interference into the market with, I did see on the news, on the ABC news, that long-range missiles, the US are given Ukraine long-range missiles. So then, of course, if they're going to be attacking into Russia, then of course Russia's not going to allow that. All right, so you're telling me that Russia has said they're going to allow the use of nuclear missiles. So we'll have to wait and see. And of course, what I would say, if we get into very uncertain times, you don't have to be in the market, because what you think might happen isn't necessarily what will happen in the market. And of course, at all times, the best thing to do is to manage your risk. All right, it's great to be on the right side of the market when something happens, but it's not great to be on the wrong side of the market. So, at least manage your risk or get your stops tight. If you've got positions that are away from the market, you can get your risk and your risk free. Be very unlikely that you would get gapped over. If you're quite a while away, the market will just trade down and stop you out. So just keep your ear to the market. And if something like that is definitely on the cards, I'm going to go and have a look at Bloomberg and see what you've been seeing. But of course, we've been having a move down. I would say pairs to the yen for sure would move down if that threat came to the market, because that would be a risk-off environment. So pairs to the yen would definitely move down. But I'm not sure what would happen with other currencies. Usually in very risk environments, the US dollar has gotten stronger when I've been trading. So that might be the same case. We'll have to wait and see. All right, I'm going to wrap it up there. Thanks for that question, and look forward to seeing you all next time. Thank you.